Good day and welcome to this special Focus On segment. I am Fifi Peters, your host. UK Development Financial Institution, the CDC Group, has given Absa a $50 million risk-sharing facility to support lending to SMEs and households in Africa. This commitment will increase Absa's capacity to offer financing solutions across Sub-Saharan Africa through microfinance and non-bank financial institutions. Joining me to discuss the dynamics of the facility and the targeted impact is Kenneth Makenna, Head of Non-Bank Financial Institutions ex-South Africa at Absa. Kenneth, thanks so much for your time. The CDC Group is describing this particular transaction, a risk-sharing transaction in local currency, as a first of its kind. So perhaps tell us, what makes this particular transaction quite exceptional and why now?
Thanks, Fifi, and good afternoon to you and the viewers. I think it's important, given that it's the first transaction of its kind for both Absa and CDC, and it's probably the first of its kind across Africa. Effectively, it allows Absa, through partnering with CDC, to extend its capital support for microfinance institutions and thereby, increase the support to the microfinance's underlying clients from a capital and financing institution. From a financing perspective. It effectively provides the retail client or the man on the street with access to finance, which they ordinarily wouldn't have been able to access.
All right, so just a bit more details on the mechanics of exactly how this will work and who can get it.
Yeah, sure. So effectively, it's a 50-50 risk-sharing facility with CDC, which means that for every $1 or one sort of local currency unit that Absa provides to its microfinance clients, the CDC will provide a dollar to back that. So for every 10 Rand that Absa provides in terms of financing to the clients, CDC will provide the other 50, hence a 50-50 risk-sharing solution. We are supporting our corporate clients to enable them to support their underlying retail clients.
And how will projects that eventually get the support to be evaluated? What are the kind of metrics that you'll be looking closely at here?
So as a start, the focus will be on our existing microfinance client base. So so that will give us the opportunity to roll out this product, and test its functionality and operating effectiveness with clients that we know. And then over time, and once we have this framework in place to identify new clients or new microfinance institutions, we'll be able to roll this out again to a broader base of clients. Effectively, it'll be similar to how we normally look at funding of institutions. The client will come to us with a funding requirement for X amount. We will then assess, go through normal ordinary credit procedures to determine if the client is suitable for providing additional financing. And then we would then reach out to CDC if we're happy from a credit perspective for them to back us on a 50-50 basis.
And in terms of the expectations of the broader impact of this deal, what are those and over what time frame will they be monitored and measured?
Yeah, the impact is important because given the time that we're in from a COVID perspective, it's a challenge for banks to provide capital support to clients on a Pan-African basis. So entering into this facility with the CDC will allow us to provide additional capital where we might have been constrained to our clients and thereby enhance support provided to them. The time frame is now, effectively. We're able to enter into any transactions as they may arise from the date of signature of this framework. And essentially, we have a 2 to 3 year sort of window to test and roll out this facility. Thereafter, we would then, for both parties, assess whether it's been effective and make tweaks as may required, and then potentially extend it.
Because many players I suppose in the wake of the pandemic, have been talking about a greater increase of financial inclusion. And I know that Absa has also been doing quite a lot of work in this space of late. In your view, how can this be further accelerated, the desire to achieve greater financial inclusion? And perhaps you can speak from a client point of view or a potential client point of view in terms of the things that they need to have in place to ensure that they are easier to lend to.
Yeah. So I think the underlying aim of this facility and Absa support of microfinance institutions is to broaden the support to potentially clients who might not have access to traditional banking products. So this facility effectively broadens that financial inclusion base, or the base that we ordinarily might not have provided sort of funding to. So therefore, supporting our microfinance institutions, who support potentially the unbanked or small to medium-sized enterprises, effectively increases that support base or the reach to clients who have access to financial products. So this is really why we're so keen from an Absa perspective to enter into this transaction, and why we've supported microfinance institutions over a number of years.
There's also been this growing trend for impact investing, right? This growing trend to allocate capital towards more socially responsible projects. But I just want to understand how some of your clients on the ground have been able to be better corporate social citizens, as it were, and still be profitable, because most companies are finding striking that balance a little bit difficult.
Yeah, thanks. So partnering with an institution like the CDC, so other than being a sort of development finance institution, CDC also acts as an impact investor, right? So Absa partnering with the CDC obviously allows us to support that mandate that the CDC has in terms of impact investing, both on the continent and globally. Included in that, there are a number of ESG sort of requirements that are put in place to ensure that our clients that we're supporting act responsibly, both from a sustainable perspective, as well as ensuring that they comply with sanctions, the requirements, that they support the correct industries. Some of the industries we might not be supporting. Some of the sort of excluded list of sectors that we're not looking to support. And typically, the underlying clients that the microfinance institutions support are looking to facilities or funding, either to grow their businesses from a small to medium-sized enterprise perspective, or to from a personal perspective. A lot of these clients use the facilities to either improve their living conditions, extend their houses, and then also invest in small businesses that they might have. So both at a corporate level as well as a retail client or man on the ground perspective, I think we're adding to the sustainability of the African economy overall, as a whole.
Yeah, Kenneth, I mean, this is, as you have said in the opening, it's the first of its kind transaction. So I imagine that there's a lot of trialing that will be done with this particular facility. Does it go without say that if successful, we could see more transactions of this kind, perhaps at a bigger scale? And at what point do you think you will be in a position to announce that?
Yes, certainly. I mean, we're always looking as a financial institutions to partner with, either DFIs or any other institution which would provide us to support our clients at an overall, from an overall perspective. So as we roll out this facility and as we actually sign on, transactions, we're able to test if the frame put in place is operationally efficient. And if so, or if not, we can tweak it as might be required, and then roll it out sort of on a more effective basis, and trying to reach as many clients as possible. And then we're always looking to partner with institutions. This is obviously not limited to the CDC, but as and where we identify other institutions to partner with, we will definitely be looking to do so. Yeah.
All right. Kenneth, we'll leave it there. I mean, I'm told that more people on this continent have got cell phones than bank accounts. So just speaking to the work that still needs to be done in the space of financial inclusion, we are watching you guys closely. But thanks for your time today. That was Kenneth Makenna, the head of non-bank financial institutions, ex-South Africa at Absa. And that is all we have time for today's Focus On. Thanks so much for watching. Until next time, goodbye.